Hello reader, so Oak here, and we're moving to idea number 11. Let's have a look. Here we go. So we're going to talk about Avation. I have made some changes to this article this evening, so just going to walk through my thinking for choosing this as one of the Oak 25 for 25. Just walk through the rationale, the opportunity, and particularly just call out some of the aspects in this AGM statement, which was just a few days ago. I only read it this evening and nearly fell off my chair. So some interesting updates to share with you in this idea. Anyway, right, well, let's start with some basics. I mean, who are Avation? So the answer is that these guys lease aircraft. This is their website. This is their portfolio of aircraft. So they've got everything from a big wide body being 3 sets of seats, so left-hand side, right-hand side, and middle row. That's a wide body. A narrow body would be single aisle, left-hand seats, right-hand seats. Yeah, so wide body aircraft are generally more expensive, fly further. They're long haul typically, whereas a something more like this is your short haul. Fly to Spain, fly to Mediterranean places, whereas these two would be transatlantic, trans to various far-flung places of the world. And then finally, you've got these turboprop aircraft that are the least expensive aircraft. Turboprops, you might sort of think, oh, they're a bit, but these are, you can sort of see the photo there. These are very cost-effective ways of traveling. So these are use about half the fuel of jet aircraft, about 45% less. They're sustainable aviation fuel friendly. So currently at 50%, we're looking 2025 to see an announcement that they're going to move to 100% SAF fuel compliant. And I talk a little bit about the ATRs a bit later on. So anyway, we'll come to that. So let's have a look. So I mean, clearly this stock suffered during COVID. Back. Let's just go back in time. So if we look at a 10-year view of the stock, you can see that it had some pretty horrendous. So this is the past year, so it's gone from 124.53. So yeah, you can see here, it's sort of the same price as it was 10 years ago, essentially, and you can see it reached a zenith of £3.28. And then it's halved, and you can actually see that there were times when it kind of went down. I think this is the low point here, 61p. Now I actually bought it. I don't think I quite caught it at 61p. It'd be nice if I had, but I certainly caught this or bought this at around 70ish p, and then sort of rode it up to £1.10, and sold it again. And it's always one of those things, isn't it, where you sort of sell something at one price and then it's now more expensive, and the natural inclination is to say, well, I'll wait for it to go back down below what I sold it for. But I must admit, I'm trying to break that habit, because of course with a well, I mean, in a sense, we need to approach stocks where we say, well, forget what the price is. Like, don't even look at the price of this. Let's just start with what the assets are. Let's start with the stream of future income and work back to what I'd be prepared to pay for that, and then then look at the price. Since I've started doing that, I've found my success levels shooting up. And to be fair, it's only, I mean, I'm not kind of giving you something that's strange and unusual. It's basically straight out of the textbook of Warren Buffett to do that, to look at the intrinsic value, um, and also the margin of safety. So what we mean by that is that if something fundamentally is worth, say, fundamentally worth £3.50, um, and you can buy it for £1.50, well, you've got a very large margin of safety. So anyway, let's kind of get into this idea a bit more. So these guys, as you saw on their website, they've got 32 aircraft. They did have 34. This back as at June, they had 34. They've sold 2, and this is an interesting area where they're renting out aircraft, essentially leasing aircraft. And these leases are, multi-year leases. I mean, essentially an aircraft will generally have something like a 25-year life. And the policy that they adopt is to depreciate the buy price of that aircraft over 25 years with then a 15% residual. And that 15% residual can be to, that it can be broken up for parts at the end of its 25, or potentially it can still be sold. It still has some residual value. So that's kind of, and it's a straight line depreciation that they follow. So that's all straightforward. And you can see here we're talking 1.1 billion of assets. So those assets are aircraft, so they're tangible things that you can touch. And the fair value assessment on them. Obviously, aircraft are being bought and sold regularly. I won't say every day because it perhaps isn't as often as that, but there's a pretty good feel for these things, because obviously there's this these are sort of quite widely recognized assets, shall we say. So we're not talking about Van Goghs and who knows what they might sell for at auction. We're talking about aircraft where we can be reasonably confident as to the value of them. I mean, that to me is important. We can see that we've got contracted lease receivables. So these are essentially, aircraft airline companies will take out let's say a 5-year lease for an aircraft, and that 5-year lease has a value. So that 406 represents, future revenue that is contracted. And it's kind of complicated a little bit more in the sense that revenue is then made up of the lease, but also then contributions towards maintenance. So as you can imagine, every so many hours, it needs an engine rebuild, or it needs this, or it needs that, or there's schedules, and there's a lot of, it's very strict policies and procedures. I mean, we only have to look at that terrible news from South Korea and I think it was a Boeing 737 that's skidding along the runway and then appears to hit something and burst into a ball of flames. And you've got to take aircraft maintenance seriously. So the way that works is that they we'll talk about that in a bit when we look at the balance sheet. But okay, well, look, multiple customers, multiple countries, multiple aircraft. So there's lots of multiple. It's not all sort of eggs in one basket, other than the sense that it's obviously all aircraft. I mean, if there was another pandemic and if we all went into lockdown, we would see something exactly like this, a nosedive to the share price. No pun intended. So yeah, look, let's move on. I mean, a couple of things that, and I've drawn this out of the AGM statement, that air travel in the year to October 24 is growing 7.1%. But the bit that caught my eye particularly was this, that it's now surpassed historical highs. In other words, it's exceeded pre-COVID levels. Air travel has, I mean, and that's significant. That's significant because, of course, you know, until now, until October 24, the industry has been playing catch up. So this is a very, in other words, what we're saying is this is a very buoyant industry, but we also know that we've got various challenges with Boeing aircraft delays. You know, there's been a strike. I mean, I won't kind of go too much into all of this, but um, there's you know, a lot of evidence that aircraft are actually a good asset to own right now, and in fact, we see this in the update from the company. So if we just get into that AGM statement, and what we see here is Avation believes that the value of popular new narrow-body aircraft. Now, notice that they say new, and notice they say popular, and they say narrow-body aircraft types, plural, have increased by around 5% over the past year. I mean, to my mind, does that mean the wide-body aircraft haven't increased? I found that statement, you know, and I do like to look at words closely because uh, you know, they've got to be careful what they say, but you know, you've got to sort of look at the nuances, I guess. So, I mean, they talk about new, so maybe second-hand or, you know, existing aircraft are not increasing by as much. They do say narrow body, so you know, does that just mean the narrow body jets, or do they mean narrow? Because at the end of the day, an ATR is a narrow body. Um, it's narrower than a narrow body. It's a very narrow body. Um, so yeah, but I mean, on the assumption that we're talking 5% across the board, let's pop this up on screen. So this is the balance sheet. This is the balance sheets there. So start again. Balance sheet is here. Profit and loss is over there. So I kind of did some little mathematics here to say, well, you know, if we're talking 791 million of aircraft, and we're talking 5%, and we're talking just the narrow body, so I've taken ATRs and narrow bodies to be you know, that's 82%, and I know that from this, so you can see here, wide bodies are 18% of the value of the aircraft, so 82 is the remainder. What we're talking about there is an upside of 32 million. And because I find it difficult to believe that narrow bodies will have gone up, but wide bodies won't, when wide bodies are the real source of shortage. I would say that Boeing's production delays have been particularly severe around the 777s and the 787s and you know, the wide body aircraft. It's my understanding that narrow body aircraft haven't been as severely affected. And of course, Airbus are very active in the narrow body market. So I kind of find it quite hard to believe that it just is 82%. So if it's not, um, that 32 million is 40 million, give or take. So 40 million, if we were talking about a one-off gain of 40 million, I mean, we're essentially, I mean, on the basis that, you know, that's net profit from 2024. We're talking about 2 years of net profit, just because aircraft are now more valuable. Now, they don't just say that aircraft are more valuable; they also say that lease rates have gone up. So again, let's just get into that. That yeah, in October, agreed an extension at a rate that exceeds the previous rental rate. Now, we don't know how long the previous rental, the previous lease duration was. I mean, let's pretend it was 3 years. You know, that's probably the shortest that they would do. Um, so what we're saying is that the rate for this second-hand aircraft is higher than what it was rented for 3 years ago when it was worth more because it was a 3-year younger aircraft. It's now a 15-year-old. So when it was a 12-year-old, and I don't know that it's 3 years, it might be 5, it might be 10. I mean, if it's 10, then we're saying the rate that you get for a 15-year-old aircraft exceeds the rate that was agreed 10 years ago on a 5-year-old aircraft. I mean, whichever number of years you pick, the implication there is that lease rates are increasing. Now there are that's the good news. The slightly less good news is that uh, you know there's three aircraft being returned in 2025. So 3 aircraft on 32 is, you know, it's about 10% of the fleet. So what we appear to be also saying is that 10% of the income is going to go up. Um, and again, we don't know precisely by how much, but if capital costs have gone up 5%, lease rates will have gone up at least by that much. And if there's a shortage of leased aircraft, perhaps by more. Okay, so again, just kind of piecing the pieces together here. So let's let's move through this a bit more. So as I say, variety of customers, variety of aircraft, variety of countries, regions. So they're based in Singapore, so they enjoy an 8% tax rate, which is another bonus. We yeah, so I've just sort of included those comments in the article here and here. Now, a major area of value for Avation is that they can buy aircraft at a discount. Now, when they do so, do they kind of make profits? Well, not really. Well, yes and no, not really. They make profits when they get an agreement for aircraft. Now, this is an unusual setup where, you know, say I was selling oak trees. Seems appropriate enough. And you know, let's say you agreed to buy 1,000 oak trees from me, and I said, "Oh, look, because you're such a good customer, I'm going to give you 10% off these oak trees." And let's imagine these oak trees are £1,000 each. I don't know how much an oak tree would sell for. Never sold one, probably never will. But you know, 10% on £1,000, and you're agreeing to buy 1,000 of these oak trees from me. Essentially, what you're doing is you're kind of saying, well, Oak Bloke said he's going to give me 10% off. So I've just made £100,000 profit on the future purchase of oak trees. Um, now that, to my mind, is a very unusual accounting practice. It's essentially, you know, you might not buy 1,000 oak trees from me. You know, you might buy them and they might sell not for £1,000. You might have to sell them at half price and get 500 quid for them. So personally, I find this the approach that this business takes is unusual. It's not a usual way to book a gain before you've made the gain. Um, it 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 appears that they have the right to buy aircraft, but not the obligation to buy aircraft. So anyway, look, I mean that's just my opinion, but you know the fact is that when they receive an offer of future discounts, should we call it that, what they're able to do is recognise that to income. So here in the latest accounts, you'll see that there's a gain on purchase rights. And what I've done, just to be clear here, is um, when a company's release their accounts, and these are the accounts of Avation here. So this is the annual report 24. When they do that, they'll issue an interim um, report which tells you what happened in the first half of the year, and then they'll issue an annual report which tells you what happened in the whole year. Um, One of the little tips, tricks I've started to do, and I find it incredibly useful, is that you take the full year figure and you take the half year figure, and you basically just say like that minus that equals that. It's such a simple thing to do. But what it allows you to see is, like here, for example, I can see that, there's 3 million of growth in revenue in the second half. I can see there's growth in other income. I can see, obviously, this gain predominantly happened in the second half. And this, by the way, was where they were given rights to a further 10 aircraft. So that was sort of announced in earlier in 2024. So yeah, anyway, that's what we see here, is that they've booked a 44.7 million dollar gain, and that's why we then see operating profit has leapt to 65 from 17, which looks marvelous. And then that's why the overall full year is 19.7 million, because essentially they made a loss here, they made a profit here, and it nets off to a profit here. But you could sort of say, well, these are sort of one-off one-off events, so that when they actually do go and buy the aircraft, you can't kind of book the profit again. You don't get to kind of claim the same profit twice. So when they announced that they were buying an aircraft to resell, they were flipping the aircraft essentially. What you actually have to do is you have to take the amount they're selling it for minus the amount that's in the balance sheet that's a gain, that's sitting as an asset, and deduct that off, because the profit is not just, let's say I'm buying an aircraft for I think they go for about 17 million. So I'm buying it for 17. I've got purchase rights of say 4, so I'm really only paying 13. But because I've already claimed the 4, if I'm selling that aircraft at 17, let's say, um, buying it for 17 minus the 4, I've got to basically say, well, I've just sold that aircraft at no profit, because I've already claimed the profit way back when I claimed the future discounts. So anyway, just it's worth understanding that, because that's an unusual. I don't know any other business that does this. Maybe if I start selling oak trees, then maybe I'll give it a bash, and you can claim 100,000 profit, and everyone's accounts will look marvelous, because I'll just promise lots of discounts on trees that. Anyway, I'm being facetious, so I do apologise. Anyway, let's carry on with this. So this is a big area of value. I guess what you've got to look at is, well, this is sort of really a future profit that's being brought forward. So it is what it is. Uh, um, and that's kind of how it looks in the 2024 account. So 112 million. This transfer to deposits, essentially, what we've got is the fair value of that gain. We've got the unrealized gain here, and then the transfer to deposit. So as they actually go and buy the aircraft, it reverses back out again, essentially, is what that's showing you there. We also can see that in the first half, as you saw a moment ago, that they made a loss, and that was basically down to a disposal. It was down to some impairments. There was an Indian, I think it was an Indian aircraft that was returned in a bad state, and they took a hit on is on the repairs. But some of this, some of this is as well things like arrears in payments that have since come through. Now, it was interesting. I found this interesting. Again, this is a little snippet from the AGM. That they've received in 6.4 million of arrears since the 30th of June. But I went and looked at the end of June accounts, and they only had 4.2 million of arrears that were overdue. Now, it could be that new arrears have happened in the second half of 2024, but I kind of find that a bit unlikely because all the airlines now are sort of, they're all busy. So would a new air, would there be new arrears appearing? Po- Poss Possibly, but unlikely, I think. What I think is and we won't know this until we see the interim report, but to my mind, this appears to be sort of clearing down probably most of the overdue arrears, but you're also talking about 2 million or more of written off arrears, that like these 4.27 again, the concept will be that um, you might sort of say, oh well, I don't think I'm going to be able to collect. I don't think I'm going to be able to collect this debt. So you write it off. You impair it essentially. So maybe some of this prior period impairments are now coming back. So again, what happens when that happens is that then is essentially a sort of a profit over and above, and it's only probably two million. But it's 2 million that's not on the balance sheet, you see, because it's been written off. So again, that could be even 2 million is 10% of profit, based on the 2024 accounts. So that's kind of quite an important clue. I felt that the 6.4 exceeds the 4.2 by over 2 million. So yeah, we've got. I mean, what I've done is I've sort of paraphrased this because I find quite a lot of these quite. Yeah, just try and simplify it a little bit. So what we see is that we've got our depreciation. Depreciation's our biggest cost. We've got our revenue. Now, interestingly, buried in all of this is there's some maintenance revenue and different things. We can see, so that's the gain that we've been talking about. There was a disposal, so that was an aircraft they disposed of at a loss. We can see equity investment gain and loss. So interestingly, these guys have got, so when they were owed money, they were given shares in, I think it's Thai Airways. I've covered it in a different article, but over here we can see that they've got a $10.7 million investment. So again, I think that that could go up in value in 2025. So what was a equity loss in 2024 could be an equity gain in 2025. Again, just number of tourists into Southeast Asia, into Thailand. When I looked it up, the numbers had vastly increased. So tourism Thailand 2024. 35 million. 35 million. So if we went and said, well, what was it in 2023? 28 million. So we're talking 25% more tourists. And I mean, yes, it's possible that some have gone there not by aircraft. But come on, I mean, it's going to be majority of those 7 million are going to be. So anyway, that's another area of, I would say, another area of value. We also see, as I've pointed out, the revenue increasing. You'll notice that I've also built a forecast for 2025, and what I'm saying is, well, I'm assuming that in the second half of 2025 that we're just going to see a repeat of this revenue that we saw in the period up to June, and then we're going to see a bit of growth, in the next 6 months, and that's just down to those lease events. So I'm just looking at a slight increase there. Depreciation, I'm just continuing on with the same levels, and admin costs, I'm assuming that they've I'm taking the average of that essentially, with a little bit of inflation to arrive at that. But what we see is down here, finance income. So that again, I've just taken an extrapolation of that. The finance expense, because the debts have been paid down to some extent, we see a slightly lower expense. Tax, I've taken at the 8%, to get us to these numbers. Now, these numbers themselves are not spectacular. I'm kind of building in quite a lot of pessimism to this assumption. Obviously, I'm assuming that there's no impairments, there's no I'm sort of not assuming any of this, that may or may not happen. And but the reason I think that this will do a lot better than perhaps these numbers suggest is going to be for a couple of reasons. So let's move on through through what I think. So the perhaps the next thing to say is, well, despite the statutory profit looking not so great, the cash flow, this generated 120 million of cash flow in 2024, in the period up to June 2024, and that is improving. It's also a couple of other things to say. Let's see, the purchase rights we've talked about. The debt is reducing down. In fact, in the update, they talk about debt being 600, and so it's this 336 and this 331. So when I took those together, they add to 668 if I take borrowings and borrowings. So 675 to 668 isn't a vast decrease, isn't a huge decrease, but there are some other things happening, in and around this. So what we also know is that they're looking to refinance. One of the things that I guess is a feature here is that some of the debt is quite expensive. 9%, 8.25 to 9 is quite expensive debt, and that's 50% of the debt is that, and the other 50% is 4.86% debt. So if they brought this down, or refinanced it all at 4.8, we're talking a chunky reduction. So we're looking at that would be 331 at, say, if I take it at 8.25, so that would be a 3.5% differential. I mean, that alone would deliver in 11.6 million extra profit, in reduced interest expense. So that's something that I'm expecting to see in 2025. I also talk about this. So they have made some payments off, from the debt pile. They also talk about having greater levels of cash. So we can see here, in the period here, they paid down near enough 68 million from the debt pile. So whilst the overall differential here isn't vast. I mean, this is a 30 million reduction that 26 of that is an increase in shareholders' equity. So we're really, we're really talking about, that 66 is the big reduction. Obviously, there's a few other reductions in liabilities that we see there, and I call these out as well. So this increase in purchase rights is obviously we see the start point is this, the increase is that, and that's because we've got an increase of the rights minus the fact that aircraft have been received, and so it's sort of a net change to the purchase rights. This deposits, this is essentially where Avation have paid 21.8 towards those new aircraft. So that's kind of deposits with the with ATR, and that's those are the sort of and yeah, sorry, deposit of that plus that. So this is long term, this is no, sorry, this is long term, this is short term. So it's actually sort of 30 million have gone into new aircraft essentially. So there's, that represents an increase in fixed assets. So and obviously cash has decreased correspondingly as well. So we can see some decreases of cash there as well. But overall, I mean, the balance sheet is obviously, it is very highly leveraged. You've got 256 of equity versus a much higher level of um, borrowings that that makes up but some of these are actually sort of, they're liabilities in name only. So there's a maintenance reserve, for example, which the best way to really think about that would be that it nets off against the value of the aircraft. So these are not liabilities as in you owe a creditor money. These are liabilities as in there's a claim. When lenders lend, they say you've got to sort of reserve some money towards the maintenance and care of the aircraft. So there's some of the liabilities here are kind of theoretical liabilities that net off against the value of the assets. Anyway, strong balance sheet is probably the thing to take. I did some digging into ATR. Leonardo is the company that make these. And as I say, I mean, I think there's probably a bit of a negative perception towards turboprops, but the reality is that they are actually a very interesting little aircraft. I mean, if you're going on a regional flight, because that's all, they're not fast range aircraft, but if you're going on a regional flight, these are pretty ideal. Yeah, owned by Airbus and Leonardo. So apologies, I forgot to say Airbus. Yeah, French aircraft. There's a new engine that they've released that reduces maintenance. So again, there's a maintenance liability on the balance sheet that with these new aircraft and new engines on those new aircraft. So as the fleet get replaced with new aircraft and potentially with engine swap outs, that the cost of the maintenance drops into the future. We also see that the next generation of ATR is the Evo, this thing here that looks very swanky, that's got hybrid motors that will use electric motors to lift off and then further maintenance cost reductions, less CO2, 20% fuel improvement. So hybrid engines, lighter weight, it's just all positive, and the purchase rights include, and in fact will be for the Evo once it's operational, which is expected in 2029. So it is some years away, but this is a very I think, if you are looking to pick up and hold these shares for a long time, you want to kind of be involved with a story that's got a future, and I can really see, hopefully this is sort of showing you that it does. That yeah, valuation is interesting because the other piece of news, I'm just trying to kind of roll these things out bit by bit, but the other bit of news was this, that 7.8 million shares were bought back. Now, to be fair, 7.8 million were bought back, and the managers were issued shares. So we've got to consider 3.7 issued, 7.8 withdrawn. But the impact on the net asset value, and this is a change to the article, this, if we take off those shares, add on those shares at that exchange rate, which is today's exchange rate, what we actually see is the NAV is a lot higher. So I'm essentially taking that value there of equity, shareholders' equity. I'm multiplying it out to turn it into pounds and pence. I'm basically taking that value there. So I'm dividing the 256 million by the 70 million shares to get to a NAV. And what I'm doing here, this is my NAV estimate. So even though profits, headline profits, don't look spectacular, what I'm kind of treating this as is to say, well, operating profits represent about 30 million. So what I'm doing is I'm kind of considering that NAV increase there to be that. Now that kind of is a little bit controversial, and probably that one would be the alternative to go for. If we do that, which is fair enough, so we're going to swap out this and we're going to put in D23 instead. I mean, we get to a 295 NAV. So whichever one this is, I mean, it's above, well above 40% discount that we're seeing here. And I think what we've got to also do, and I'm sort of thinking aloud here, is that on the basis that there's now 32 aircraft, not 34, that two have been disposed of. I mean, it's not going to be a vast difference, but I would say you're looking at, on the basis that there's about 10 million quid that's come off the balance sheet. So it's about 1%. So it's not a material, vastly. I mean, let's say 1.5. It's not going to be a vastly material, but yeah, it's a little bit back there on the depreciation as well. So we're looking at that feeding through into, still at 295. But yeah, part of the question here will be just what, are we going to see zero growth? These aircraft are all fully leased, so are we going to see zero growth, or not? So let's move on to oops, valuation drivers. So kind of couple of things to say here. I mean, we've talked about how air travel's growing, that there's a strong driver to, there's 3 aircraft that are going to be leased into a new lease in 2025. We've talked about how there could be a 32 to 40 million increase in the value of those aircraft, and that 295 NAV doesn't include that. That doesn't include that. I mean, if it did, if it did, we'd be looking at, so if I just sort of add 40 into this, just to give you an idea. I mean, that boosts the NAV by about 40p, So that's pretty that could be pretty significant if that's the case. And obviously it's kind of a bit of a theoretical, because it would only be really through the sale of further aircraft that we would evidence that, I guess, and turn that into cash. But the principle is that um, rather than, and I talk about it a bit further on about how this, you could look at this as a sort of a, let's asset strip it down, let's kind of turn the whole thing into cash and then return the cash to shareholders and get £2 something back, maybe £2.95 back. But the the interesting thing here is that it's not a value play, or at least it's not being played as a value play. It's being played as a growth play. And why should it be a growth play? Well, um, so the buybacks, as you've seen there, that's actually boosted the NAV by quite quite a quite a NAV per share by quite a bit. So that's a further valuation driver. Who knows? Maybe they will buy back further shares in 2025. I mean, if they did another 10%, again, let's kind of have a look at what that would do to this. So if we said let's take, I mean, I'll just do the same number again. Again, there's about 40p gain to that happening, if it were to happen. I don't know that it will happen, but when you've got something at such a large discount, I mean, of course, we'd have to deduct off the 10 million quid to do the buyback. Obviously the gain isn't going to be exactly 40p. It'll be a bit less because you're reducing the assets when you buy back the shares. But anyway, it does give you some idea of the potential of this. The next thing is, I suppose, the alignment with ATR. I really like that the ATR aircraft is in a good space. It's a good, the strategy is a good one. I like the strategy because these aircraft, as a regional hopper type aircraft, are just ideal. They're sort of, I call them cheap and cheerful. I'm not sure ATR themselves and Airbus themselves would want me to call them that, but that's what I'm going to call them. And cheap and cheerful to run, cheap and cheerful to buy, decent reliability, and that to me feels like a good, decent strategy. That these are aircraft that are kind of no-brainers, and they're available. Airbus are not on strike, then they're rolling them out. It's also the case that refinancing would, as I say, that we saw that would deliver in a big boost in 2025. And they talk about that they're in negotiations on that they've signed a term sheet with a major international bank, that this will be available for financing. So if this can come through, this will save a big chunk of money. So this is the bit where I go on to talk about AVAP being at a crossroads, and do they asset strip it down to nothing and return cash to shareholders, or do you actually just grow this thing? And what happens if you grow this thing? So I started to kind of think about that, and I was working from taking just some extrapolations of like the revenues this much, the number of aircraft is this much, so the rental must be this much. So I just sort of taken some um, some assumptions to arrive at a set of if each aircraft is rented at this, and the depreciation is that, and the debt is this, and the cost is that, essentially I did all of that, and I ended up where it sort of virtually, I mean, it kind of broke even and not much more. So I kind of went, oh, right, okay, well, so much for the growth strategy. But then I started to think about it, and I started to think, well, like I'm doing a 20-year life here. Avation don't do a 20-year life. they're actually depreciating at 25-year life with a 15% residual. So I was being a bit harsh around quite a number of assumptions. So I hadn't factored in the 3.4 million gain per aircraft. Obviously, because they're claiming the gain ahead of time, you know, you can't claim it twice. So I wasn't claiming it twice, but really, you know, it's 0.02 plus 3 3.4, and actually this 3.4 might actually be a bit more than 3.4, because yeah, I think the next accounts will make it clearer. But when you've got 36 aircraft, 112, I mean, it sort of is, yeah, you know, the gain might be a bit different to that, especially as well if prices have just gone up 5%. Um, you know, the differential could be different to 3.4. I used the historical rate to arrive at 1.18, but you know, is that fair when we're in a high demand world where air travel's at record levels, has increased 7.1% in the year to October 2024? You know, when we're talking about brand new aircraft, you know, do brand new aircraft lease for the same as a 25-year-old aircraft? I mean, almost certainly not. You know, the that also that the and again, this is a sort of a hidden away in the numbers a little bit, but the maintenance lease revenue will be different and lower. So in other words, you're having to cover less money for maintenance lease, the maintenance revenue, which gives you more scope for charging the actual lease itself. You know that a bigger chunk of the pie goes to Avation because less needs to be set aside for repairs and maintenance, essentially. I basically changed my depreciation policy, and that you know, I sort of moved it to whatever Avation's policy was. And again, that might even be too harsh because newer aircraft maybe have longer lives. You know, they're more sustainable. They're more able to run beyond their 25-year life. Perhaps I don't know that to be a fact, but um, so yeah, if we rerun the numbers based upon those things, what I did was I said, well, we're talking about per aircraft. This is per aircraft per year. Okay, so if we're talking about 34 aircraft, so I'm just saying, like, if we double the fleet, 34 aircraft over 20 years. Um, at half a million per aircraft per year, 34 years. And this is an undiscounted value. I'm just assuming that, you know, rentals will go up with inflation and costs will go up with inflation and so on. So, you know, the future value of money is neutral as far as my assumption here is concerned. But this doubling of the fleet would generate 343 million over 20 years. Now, again, I've done it over 20 years. If we change that to 25 years, we're 22 million. So that's kind of 300 and sorry, 430, 435 million, I think it was. So it's you know, if we take that if we take and then just say, well, you know, let's deduct off tax, let's deduct off expenses, apply a PE of 6. Where I get to is essentially that growth strategy can add another £3 to the value of the share. So in other words, turn what is today um, a £3 share value to £6 is kind of, you know, that was sort of my model of working through what it could look like if they grow. And it, you know, certainly appears they are going to grow. I mean, they've got I've modeled it on 34, which was the number of aircraft they had at the time that I did the modeling. Today they have 32, but they've got 36 aircraft on purchase rights. So if we go up to in fact, if we go to here and sorry, go to here, uh, orders pending. These 36 here are the 36 that we're modeling for. Um, Now, these are not all going to arrive, couldn't all arrive tomorrow. They arrive in dribs and drabs over a series of years. So obviously this model doesn't really account for that, where I'm assuming that if we had them all 500,000, it would generate that level of profit. So it is a nuanced, I suppose, three extra £3 over a period of many years. But I suppose we can also say, well, that will also increase with uh, lease rates as well. So, okay, look, to conclude, because I've obviously talked an awful lot and gone into quite a lot of accounting detail with this one. Um, I mean, is there risk? Yes. If there were another COVID, if there was something that caused air travel to stop or to reduce, that would obviously hit Avation. So you are kind of reliant on the airline industry continuing to be successful. Certainly appears to be at the moment, and the outlook is strong. Um, they are a smaller scale operator than competitors, so I mean that could mean that they get bought out in 2025. In fact, right at the end, I say, oh, this was on Sky News back in October. There's not been anything since, but Azora, which is backed by Oaktree, is interested in a takeover of Avation. Sky News understands. Sky News understands things very often that then happen. Um, so their understanding is quite a good forecaster of the future. Um, so that's potentially potentially a positive as well. I did read about how Avation is about 2.5 times cheaper than its American competitors. I think all of these are listed in the US, if or maybe Canada, if I'm not mistaken. And I didn't take, personally, I didn't put too much on that, because I think quite a lot of American shares are overvalued. Um, and British shares are undervalued. But that differential. I mean, if somebody, if one of these three kind of said, well, we want to increase our returns, a logical way would be to buy out Avation. I mean, these are a lot larger than Avation. Um, yeah, I mean, I do talk about, on one hand, you can approach this share as a sort of a value stock, but really the way to think about it is a growth stock. I do like the management. I think the management are very capable. I mean, they present themselves very well. If we Let's have a think. It's in here, I think. There's various videos here on their website that you can watch. I mean, I was impressed by the fact that they just quite literally tackled and answered every single investor question, in a way that wasn't holding back on things. I did take a lot of yeah, I guess they felt like they were engaged very, very openly, and had good answers to some challenging questions. So yeah, look, to conclude, I hope that's been useful talking through this idea. Um, that's why I included it in my Oak Bloke 25 for 25. Do comment or like or subscribe, all of that fun stuff, if you want to. I mean, the chief part of what I do will remain on Substack. I'm not looking to become a YouTube, whatever a YouTube thingamajig is, a YouTuber. Um, for me, Substack's still the core to what I'm doing. But yeah, I think it's useful to supplement what's written with what's spoken, and hopefully that's been a useful exercise for you. Okay, cheerio for now.